Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in corporate filings. And I've got a juicy one about Permex Petroleum Corporation today. It looks like they might be making a pretty big move in the oil and gas world. So let's dive right in and see what's really going on behind the scenes. Now, Permex Petroleum Corporation is letting us know about a significant development. It seems they've entered into an option agreement, which basically means they have the right to buy some oil and natural gas assets. And this isn't a small deal. It involves over 50 producing wells, plus a whole lot more land that could be developed, which is a pretty exciting prospect for any energy company. Let's break down this option agreement a bit more. Permex paid $75,000 for this option, and they have a 6-month window to decide on the purchase. The total price, if they go through with it, is $3 million. And this can be paid using a mix of cash and stock. But there's a twist: they have to put down at least $1.75 million in cash. This gives them a chance to explore the potential of these assets before fully committing their capital. It's a smart way to manage risk in a volatile industry. So what exactly are they getting an option on? It's more than just the 50 producing wells. They're also getting gathering facilities, which are like the pipelines and equipment needed to get the oil and gas out of the ground. And importantly, they're gaining rights to over 20,000 net mineral acres of undeveloped land. This undeveloped land is crucial because it represents future growth potential, untapped resources waiting to be explored and developed. It's like having a treasure map with many potential riches. The company also issued a press release about this deal on September 2nd of this year. This is pretty standard practice for public companies to announce significant agreements like this, and it's good that they're keeping investors informed about their strategic moves. The press release is attached as an exhibit to this filing, so anyone wanting more details can easily find it and read it for themselves. An interesting tidbit here is that Permex has checked the box indicating they are an emerging growth company. This generally means they're a smaller company that hasn't been around as long, and they can take advantage of certain regulatory benefits like using extended transition periods for accounting standards. It's a common status for companies that are still in a growth phase and trying to establish themselves in the market. And the report is signed by Bradley Tyon, who is the Chief Executive Officer of Permex Petroleum Corporation. This is the person ultimately responsible for the company's direction and its strategic decisions. We always look to the CEO's signature to know that the information presented has been officially approved and submitted. Now let's shift our focus to what this really means for Permex and for the energy sector as a whole. This option agreement shows Permex is actively seeking to expand its asset base, and that's a positive sign for growth. The oil and gas industry is competitive, and having a broad array of producing assets along with significant undeveloped acreage can be a real advantage. This allows them to both generate immediate revenue from the producing wells and secure future prospects with the undeveloped land. It's a strategy that aims for both current income and long-term capital appreciation. A key factor to watch will be how Permex finances the $3 million purchase if they exercise the option. The combination of cash and stock mentioned in the agreement suggests they might be looking to reserve cash while also potentially bringing new investors, or using their own stock as currency. The cash component of at least $1.75 million will likely require significant capital, which could come from existing cash reserves, new debt or equity financing. It's essential to see how they manage this financial commitment to ensure it doesn't strain their resources. The fact that they have a break fee of $50,000 if the group terminates the option is also noteworthy. It shows there's a structured agreement in place with consequences for either party, some protection for Permex if the deal falls through. Due to the seller's actions, looking at the bigger picture, Permex is making a strategic play in a sector that's always evolving. Their focus on acquiring producing assets suggests a desire for stable cash flow, while the undeveloped acreage points towards ambition for future expansion and increased production. This kind of move can significantly alter a company's trajectory if the acquired assets perform as expected. Overall, this filing from Permex Petroleum Corporation signals a potentially transformative step for the company. They are demonstrating a proactive approach to growth by securing an option on a substantial portfolio of oil and gas assets. while the success of this move hinges on their ability to effectively finance and integrate these assets, it undeniably sets an ambitious tone for their future operations. It's a story of calculated risk and potential reward in the dynamic energy market. What do you think of Permex's strategic move? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more insights like this. Don't forget to join our Discord community linked in the description for even more C-suite decoder discussions. Thanks for watching, and we'll see you in the next video.